Good evening and thanks for joining us. This is NTD Business and I'm Paul Greeny. The Dow Jones sees its worst day since September. We have analysis on what might be causing it. Economic data shows Republican states and Democrat-run states have fared differently during the pandemic. We'll look at which ones did better. JP Morgan makes the case for Bitcoin. Just 3 years ago it called it a fraud and would implode. What changed? And China's Ant Group is set to be the biggest initial public offering in history. A quick election update before our economic news. Joe Biden says the recent email leak is a smear campaign. He says the recent reports about his son's dealings in China, Ukraine, and other countries are just meant to damage his chances of being elected. Potentially damaging emails and photos were found in a laptop that allegedly belonged to his son Hunter Biden. Biden told CBS that President Trump's lawyer Rudy Giuliani was given Russian disinformation, but both the Director of National Intelligence and the top GOP member on the House Judiciary Committee say the emails are not disinformation. Biden didn't say whether the emails or other laptop materials were authentic or not. Biden has repeatedly denied that he knew anything about his son's business dealings. He also says Hunter's business isn't related to his running for the White House. But critics say Hunter's alleged emails and photos could be used to blackmail his father, posing a potential national security threat if Biden is elected. NTD hasn't been able to independently authenticate the emails and the materials. And Wall Street fell sharply on Monday. The S&P 500 posting its biggest daily decline in 4 weeks. The Dow fell more than 650 points or 2.29%. S&P 500 lost over 64 points or 1.86%. The Nasdaq dropped less than 190 points or 1.64%. This is one of the busiest weeks for third quarter earnings. Refinitiv says among the S&P 500 companies that have reported earnings so far, over 80% have beaten expectations. Like we just said, the markets dipped today. So what caused it? Asked Lance Roberts. He's the chief strategist at Real Investment Advice.
Well, first of all, we've been talking about this for the last couple of weeks, saying, we've been kind of reducing risk in portfolios and taking some action to kind of shore up risk going into the election. This is really just the realization of a couple of things that we've warned about here over the last couple of weeks. One, no stimulus is coming here before the election. We have been anticipating that was going to be the case. The second thing now is that all of a sudden the consensus has been it was going to be a Biden victory with a Senate being taken over by the Democrats. All of a sudden, with polls tightening up here as we get much closer to the election, that's not such a certainty. And why that's important, of course, is a Biden victory with a Senate sweep, which would be a what they call a blue sweep. That would ensure a very large infrastructure type program coming in, green energy and these type of things, which was really what basic materials and industrials have been ramping up here on over the last couple of weeks. But the reality is all these sectors were very overbought. We needed to have a correction. This is, while a little bit larger than we expected today, is something we've been kind of expecting to happen.
Mm-hmm. And one point on something you released recently, Lance, it was on your debt to income ratio piece. You said that millennials have seen the largest increase in debt in the last 5 years. In 2015, the average millennial had about 49,000 in debt, and by 2019, they're carrying 78,000, an increase of 58%, is quite significant. Is this just a case of millennials getting older, inevitably taking on more debt, or is it a case of overexuberance?
It's really more the former. It's that, we live in a consumer-driven society, right? We've got to have the nice cars. We've got to live in a bigger house, really, than we can afford. And so low interest rates, of course, help spur that, that buying of really assets that are more than we should have bought anyway. So, we buy a bigger house, we buy a better car, we buy these type of things. And as long as interest rates are low, we go, hey, you know what? We can afford it, right? I can get it in on my budget. It's all fine and dandy until you lose your job or there's an economic recession or a pandemic, economic shutdown, these type of things. But the reality is that when we look at these statistics from the federal government says, oh, debt to income ratios are the lowest level on record like the last 40 years. That data is very, very skewed by the top 10% of income earners who have such a large disparity of wealth over everybody else. So when we actually look at millennials and we look at kind of even your baby boomers in kind of the mid-tier 50 to 80% bracket of the population, their debt to income ratios are exceedingly high, which is why we see, retirement accounts for most individuals less than 1 year's salary. Really, the financial stability of a large chunk of America is very weak.
And on this show, we talk about how reliant the Chinese economy is on exports. Of course, the United States, it's very reliant on consumer spending. Is this a problem? Should there be a better balance?
Well, it's an interesting situation that you run into because, again, we're very dependent upon consumption, right? We want all these things. And this has been the argument now for the last several years is let's bring manufacturing back to America. Let's make America great again. I think it's a great story. But the problem is that when the average American demands $15 an hour minimum wage and they want benefits and 401k plans and health care and all these other things, that's all fine and dandy, but it's a cost that has to be embedded into the price of products that we buy. So we don't want to pay $5,000 for a television. We want one from Walmart for $300 that we get from China. So this is why we outsource labor to the lowest cost producer in all other countries, and that moves around depending on where the lowest cost of labor is. But until that, that consumption desire changes, and that won't, it's going to be very hard to bring manufacturing back, and our trade balances with China are going to continue to be what they are. And actually reversing a trade deficit with China would be very detrimental to the U.S. economy.
Interesting. No loss, no gain. Lance, appreciate it. Thanks so much.
Thank you.
And sales of new homes in the United States unexpectedly fell in September. It's been one of the bright spots during the economic recovery. Could mean a slowdown in the housing market, which has really been red hot this year, thanks to the record low interest rates.
The Commerce Department says new home sales fell 3.5% from August to September. Economists polled by Reuters expected a 2.8% rise.
Well, to me, the biggest surprise is actually the downward revision to previous months. And then within that context, such a low print as well. So this was a little bit of a surprise to the downside.
Currently, the 30-year fixed mortgage rate is at an average of 2.8%, a historic low. Economists wonder how long that will last.
After all that election uncertainty is behind us and markets begin to readjust to some of the go-forward break-even inflation rates that we're seeing, this would suggest that we may be in for higher mortgage rates next year. And by extension, I think we'll see a big decline in mortgage affordability.
The drop in home sales followed data last week showing that both new home construction and new building permits surged in September to levels not seen in over a decade. This suggests the housing market could remain a bright spot for some time to come.
Unemployment data shows that red states have fared better economically than blue states during the pandemic. It also shows a correlation between the severity of lockdowns and fluctuations in unemployment.
Republican states in general have been less economically affected by the CCP pandemic than Democrat states. Of the top 10 states with the lowest unemployment rates in September, 9 are Republican. Of the top 10 states with the highest unemployment rates, 9 are Democratic. Year over year, the least affected states are Nebraska, South Dakota, and Alaska. They are all red states and all saw less than a 1% change. The most affected states, all blue states, are Hawaii, Nevada, and California. Hawaii's unemployment rate rose to about 15%, Nevada's increased to 12.6%, and California's rose to 11%. Republican-led states tended to impose less severe lockdowns in response to the pandemic and opened their economies up earlier. The top 10 least affected were Nebraska, South Dakota, Alaska, Kentucky, Mississippi, Missouri, Montana, Vermont, Iowa, and North Dakota. Most affected were Hawaii, Nevada, California, Rhode Island, Massachusetts, Illinois, New York, and Texas. A total of more than 23 million Americans were receiving some form of unemployment assistance in the week ending October 3rd. That's a drop of just over 1 million from the week prior.
And JP Morgan is talking much more positively about Bitcoin now. For years it was skeptical, even calling it a fraud in 2017. Now it says Bitcoin's value could triple. One reason it mentioned more than once in a recent statement is Bitcoin's popularity with millennials. It says older investors prefer gold, while the younger prefer Bitcoin as an alternative currency. Fergus Hodgson is an author at Gold Newsletter and also a director at Econ Americas, its wealth management and economic intelligence company. I asked him why Bitcoin is popular with young people.
Oh, many reasons. First, millennials are so much more accustomed to the digital world, right? And they want alternatives, they want choices, they don't want just one type of money. I've been following this since Bitcoin basically came out in 2009. We don't like a monopoly, a central bank determining what our currency is. We also know that there's inflation, that we're being taxed gradually at about 10% per year if you go by private measures. And so one of the articles I've written for the Epoch Times is saying that there are actually 4 signs now that inflation is on the rise, that we're feeling it. So we want options, we're more tech savvy. This is the new form of money, not just Bitcoin, but cryptocurrencies in general.
So you don't think these young people are just watching this, you could say, quite erratic movements in Bitcoin and kind of speculating on it? Do you think that they've actually thought this through?
Whether people actually understand the mechanics, that's another question. We don't need to know exactly how a car runs to want to use it to get from point A to B. People are attracted by its purposes, its uses, not by the underlying mechanics, which may or may not be known to millennials. And so cryptocurrencies do serve a purpose, and particularly because we see before us that traditional currencies are basically outdated, that they are confined to nations, they are slow, there are all sorts of clearinghouse issues. And so if we can trade directly and quickly across borders, obviously that's a huge advantage. Also, because cryptocurrencies are privately originated, there is more competition. There's less incentive to inflate that currency out of existence. Right now we see that there are about 20 currencies that are having crises around the world with double-digit inflation. So everyone is aware of this. It's very easy. There's better information. We're more aware of inflation taxing us, and therefore we're naturally going to look to an alternative.
And how significant is the PayPal adoption last week?
Well, it's not just PayPal, but large institutions are getting behind cryptocurrencies. And there's a great, so that PayPal is just one more that is adding, it is adding weight to this, credibility, making it more available. So I see it as a wonderful milestone, although I do believe that we'll have to go beyond just Bitcoin. I'm not a Bitcoin maximalist, but there's actually great new research out now from a professor and academic in the United Kingdom in the Journal of Alternative Investments explaining the investment case for cryptocurrencies, that they have a low beta, which means they have a low correlation with regular stocks, so they're great for diversification in your portfolio, and that the popularity is driven by past returns. Now, of course, there was a peak in 2017, but in general, cryptocurrencies, you can actually get a more balanced portfolio now, and they're rising at a more natural rate.
And you mentioned diversification. Some people call Bitcoin the young person's gold. You think it's a fair assessment?
They're just different items. You know, the truth is that gold is about as steady or as stable as you can get in terms of protecting your long-term wealth. And of course, gold has been even more advantaged during recent times, given lack of confidence in fiat or government currencies. Yes, people do see cryptocurrency as an alternative, but it's a different alternative. It has different qualities associated with it. And keep in mind that the cryptocurrencies are only about a decade old still. It's such a short period of time, just a blink of an eye in economic terms.
Mm-hmm. Fergus, really appreciate the assessment. Thank you so much.
You're welcome, mate. I'm glad to be on.
And the parent company of Dunkin and Baskin-Robbins might go private. Dunkin confirmed it's in acquisition talks with Inspire Brands. Didn't reveal any further details, but it is set to announce its earnings on Thursday. Inspire Brands was formed in 2018. It includes Arby's, Buffalo Wild Wings, and Jimmy John's. It has over 11,000 locations worldwide. And New York's Times Square is welcoming back visitors with a week-long celebration. Restaurants there are offering 3-course meals at a fixed price. It's quite reasonable. You can dine there or get takeout and delivery.
Welcome to the Taste of Times Square, where restaurants are offering 3-course meals at a reduced price. One of the restaurants is located right here in the center, underneath the New Year's Eve ball drop. The Times Square Alliance is welcoming back visitors with a week-long celebration for diners. 20 Manhattan restaurants are participating, offering 3-course meals for $35.
Pasta, appetizer, dessert, the whole shebang for $35. The best deal in New York City.
One of them is Italian restaurant Tony's Di Napoli. Diners can eat outside right in the heart of Times Square.
Yeah, I love this because we were here a month ago and this wasn't here.
It's perfect time to be here because it's not so crowded.
The restaurant has been closed for 6 months, but they're happy to be back.
Oh yeah, I hear a lot of cheering, people passing by saying, yeah, Tony's, yeah, Tony's. So we are back. Tony's opened last week and we're going to stay open and with 25% capacity.
NYC is only allowed 25% capacity for indoor dining. People tell us there won't be enough for restaurants to survive, but they're trying to remain hopeful.
Inch by inch, we're coming back. This is our new norm.
People are showing up, they're coming back. I'm sure it's going to be as good as it's always been.
It's going to be a new normal, but I think we're in the right direction.
The week-long Taste of Times Square event will take place between now until October 30th.
Chinese fintech company Ant Group has set the price of its shares in an initial public offering. They'll start selling shares Tuesday, and it's on track to be the biggest ever listing.
Ant Group is set to raise over $34 billion through its dual initial public offerings, ranking it as one of the biggest IPOs ever. Ant Group is the company that runs Alipay, the payment system developed by e-commerce giant Alibaba. It has 5 business areas: payments, wealth management, credit scoring, lending and insurance. The company will be listed on both the Hong Kong and Shanghai stock exchanges. Alibaba holds a 33% stake in the company and Jackie Ma holds a controlling majority share. It's the leader in China's payment service industry, which is estimated to be worth $16 trillion. Globally, its user base is 1 million. Potential issues for investors could be the Chinese government's control of domestic businesses and also the company's potential to be added to the US entity blacklist. It's expected Ant Group will make its market debut on November 5th.
And still to come, China says it will sanction several top US defense companies. Chinese official says the country is protecting its national interest, but didn't give any details. And Samsung mourns the death of longtime chairman. He transformed the company into South Korea's largest conglomerate, but he's not without his own controversy. Welcome back. Industrial stocks tanked on Monday. China said it will sanction several US firms over arms deals to Taiwan. The list includes top defense contractors like Lockheed Martin and Boeing. A foreign ministry spokesman said China was protecting its national interest. The move comes after Washington approved an arms sale to Taiwan. It's worth about $1.8 billion. The Chinese regime considers Taiwan part of its territory. It's never ruled out using force to bring it under the party's control. The US has no official ties with Taiwan, but it is bound by law to provide it with the means to defend itself. In recent months, the Trump administration has ramped up support for it. Beijing has, in turn, escalated military pressure. China hasn't given any details about what form the new sanctions will take. And the leader of South Korea's biggest conglomerate, Samsung, died yesterday. He helped build his family business into one of the world's biggest tech firms.
Kun-Hee, the charismatic leader of Samsung Group, died on Sunday. South Korea's biggest conglomerate said Lee died with his family by his side, including his son, Samsung Vice Chairman J.Y. Lee. The news comes 6 years after Lee was hospitalized for a heart attack. The 78-year-old helped grow his father's noodle trading business into a powerhouse of affiliates. During his lifetime, Samsung Electronics developed from a second-tier TV maker into the world's biggest technology firm by revenue. But he was also convicted of bribery and tax evasion, and his empire was criticised for wielding huge economic clout. Lee's death leaves the South Korean family-controlled conglomerate with thorny succession issues. On Sunday, Samsung Group heir J.Y. Lee arrived at the funeral hall for a memorial. He's been embroiled in legal troubles linked to a merger of two Samsung affiliates that helped him assume greater control of Samsung Electronics.
Sources say a European Union will approve a multi-billion-dollar merger between Fiat Chrysler and PSA. Shares were up in both companies on the news earlier today.
Fiat Chrysler and PSA look set to win EU approval for a $38 billion merger that would create the world's number 4 car maker. That's according to sources close to the matter. The automakers hope the tie-up will help fund a shift to cleaner vehicles. If the EU gives the go-ahead, it would formalise the creation of a group called Stellantis. It could use profits made from selling pickup trucks and SUVs in the US to pay for the development of zero-emission vehicles for sale in Europe and China. The all-share merger was announced late last year and would unite brands such as Fiat, Jeep and Dodge with the likes of Peugeot and Citroën. It would also aim to make annual cost cuts of $6 billion without closing factories. To allay EU antitrust concerns, PSA has offered to strengthen Japanese rival Toyota, with which it has a joint van venture, by ramping up production and selling vans at close to cost price. FCA and PSA will also allow their dealers in certain cities to repair rival brands. The sources said the EU decision could come by the end of the year, ahead of the official deadline of February 2nd. The two automakers have said they hope to complete the merger by the first quarter next year. The European Commission and Italian-American group Fiat Chrysler declined to comment. France's PSA also did not immediately respond. Shares were up in both companies Monday. PSA rose around 3%, while Fiat Chrysler gained as much as 6%.
And still to come this evening. A new app could help travellers get around easier. The app was tested on passengers on a recent flight from London to Newark. Welcome back. A new smartphone app could make it easier for international airline passengers. It helps show whether they've complied with testing requirements for the CCP virus.
At Newark Liberty International Airport, volunteers show a new app on their smartphones. Switzerland-based Commons Project Foundation has organized a trial for its new application. It's called the Common Pass Digital Health Pass. Volunteers on United Airlines Flight 15 from London's Heathrow to Newark were tested at the UK airport for the CCP virus. The results are stored on volunteers' smartphones, which are shown to officials upon arrival in the US.
And so what this is doing is making this a secure electronic mechanism so that airlines and countries can actually have confidence that people who have gotten tested actually did get tested.
The pandemic has led to a variety of travel bans, quarantines, and testing requirements. Each country has imposed its own rules. The Common Pass project aims to establish standard ways to verify lab results. J.D. O'Hara and Herman Elger were volunteer passengers testing the app during the flight from the UK to the US.
The app is very simple. QR code, name, negative test, result, and that's really it. That's simple. That much information.
Passengers can use the app to find participating labs and testing sites, retrieve lab results, and complete health forms. The app and its associated data platform can confirm their results comply with the destination's requirements. It also generates a QR code that authorities can use to confirm compliance. Scientists warn there are concerns about the accuracy of some rapid tests. People can be infectious for several days before they show symptoms, and these people may also test negative.
That's the latest business updates for today. Thanks so much for watching. We'll see you tomorrow.